Welcome everybody to the Ellsworth Advisors monthly update. Today we're going to be talking about basically what happened in May, whether it's the economy, markets, and then how our accounts or how our portfolios performed for the month. Welcome Miele. He's been with us the last several videos. He is our Director of Business Development. And basically I'm going to have him start off with a little bit of an economic update, and then I will review what the markets did and how our accounts did. Cam?
Perfect. Thank you, Kelly. Good morning, everybody. Interesting market, to say the least. We've experienced a lot of volatility in the market. That shouldn't be lost on anybody. I think the key is when you look at volatility is you got to stay the course. Remember that these are long-term investments. These are quality companies that we own. And by staying the course, we will ride this wave out. Biggest issue, obviously, Kelly, is tariffs. And right now we have a protracted trade disagreement with China. Looks like we have a new burgeoning trade disagreement with Mexico. The U.S. is obviously a very strong trade partner with both China and Mexico. And tariffs and uncertainty, while the motivation, I think, is the right course of action, meaning that we need to protect our IP when it comes to China, meaning we have to have some semblance of security at our southern border when it comes to Mexico. The uncertainty of tariffs create a lot of angst in the market. If there's one thing markets don't like, it's uncertainty. So I don't know about your expectation, but my expectation is that we're going to see some continued volatility until, number one, we get into earnings season and have either some positive earnings news or some negative earnings news, or until we have some sort of resolution to either of these trade disputes. I think, getting China in a trade resolution there could be very powerful for the market. Mexico, if you look at Mexico as a trading partner, we don't actually import a lot from Mexico. So this is more of a punitive action, again, about securing the southern border. But China, we all know we import billions of dollars of goods from China every year. And so getting that issue resolved could be a strong force for the market. Other than that, the economy continues to show good resiliency. With this trade uncertainty, the Fed is even back in play, potentially a rate cut towards the end of the year, which could be another strong driving force of the market. So, as we always say, we're conservative investors. We manage the portfolios very conservatively. We buy great quality companies, and great quality companies are going to do well in up markets. They're hopefully going to do better in down markets, and they're going to recover stronger as the cycles turn from a down market to an up market. So my advice to our clients is, got to stay the course. If you don't have the stomach for the volatility, don't watch the market, because right now it is a little volatile.
From an economic standpoint, we get our final GDP numbers, the latest GDP for first quarter. Basically came in at 3.1%. I think the last number was 3.2. Yeah. So, right there at 3.1. Strong first quarter. We did see earnings growth in the first quarter. But like Cam said, now we're kind of going in that dead period. We're not going to there'll be a handful of earnings announcements, but hardly anything until we get into, mid-late July. That's when earnings start to come into full swing again. Yeah. The impacts of the tariffs is very speculative at this point, especially on the Chinese side. And the Chinese trade negotiations, I think that is going to be with us for a while. Yeah. Supposedly, there's talks of Trump and Xi meeting at the G20 at the end of this month. I wouldn't expect a lot to come out of that, except for a lot of headlines and just noise around that, but true resolution on that side is going to take a while. And all that does is it creates uncertainty, but the other side of it is U.S. companies are resilient, and as you'll see when I talk about the portfolios, some of the companies that got hit in May are companies that do a lot of business in China, so their prices have already adjusted. But the other side of those trades or those positions that we have, we're basically just giving up gains that we had. So, long-term impact, they're still solid companies, but now it's the matter of how well the companies are going to be able to navigate the different rules or what's going to come of the Chinese side of it. The Mexican tariffs that were thrown out there last week, once again, I don't think that's an economic issue, and it's really a ploy to put the squeeze on Mexico. It kind of hit me over the weekend, or when you think about it, no longer are we in a world where you solve problems through your military, but you can do it. You see it in smaller conflicts, but when you look at the developed world, you don't park armies on people's borders and start invading to try to get things your way. And the U.S.'s most powerful weapon is through economic leverage. And right now, Trump has decided that our economic leverage is the ability to do business with the United States. And so if we can squeeze somebody, we're going to do it on the economic side. And I think that's all that's going on, in the Mexico situation. They're sending delegates up to talk about the situation. I think this is a short-term issue with Mexico.
I do too.
And Mexico, I think, will play ball.
I think it'll play out, and I think it'll play out well. China concerns me a little bit more. Most everybody knows the Chinese philosophy is they have a very long-term outlook on things. Obviously, President Trump's going to be running for re-election in 2020. Resolving this issue quickly for him would be a nice political card. And perhaps the Chinese are going to sit back and say, let's see if he gets reelected. And if he doesn't get reelected, maybe we'll get someone who will have a little softer stance. So it's going to be an interesting dynamic to see how this plays out for sure.
And a lot of it can be reversed pretty quickly.
Yep.
I was reading an article this morning, and they're talking about, they're making some good points. Worst case scenario, if these tariffs stayed in place for a long time, what does that do to our GDP? And the point of the article is, based on what's happening economically right now, if everything was good with China and we weren't having these trade issues, where would our GDP be? Probably easily be a 3+% year. If these things drag on, that kind of gets us back into what we saw for much of this economic recovery in that 1.5–2.5% GDP growth range. It's slower growth, not rolling, but things kind of stay as is. Obviously, we'd like to see more in that 3 to 4% growth area. We'll see how that plays out. But then again, we'll circle back that we are late in the economic cycle. And, there are signs that we're late in the economic cycle, meaning at some point the economy is going to slow down. May, we saw a lot of volatility, and kind of jumping over to what happened in the markets. So for May, the Dow was down 6.69%. The S&P was down 6.58, so both down, 6.6, 6.7. The EFA down, which is the developed world international markets, down about 4.8%, so they didn't feel as much pain as we did in May, but then again, they didn't run up as much as we did prior to May. Emerging markets down 7.53%, which is not surprising, feeling a little bit more pain than the U.S. In the world of commodities, which we've always had a position in May down 5.4%, real estate down 0.3%. So really down 5, 6, 7% for major markets. Real estate, a little bit, a lot less pain there, basically flat for the month. Year to date though, Dow down, the Dow is up 7.5% year to date. S&P is up 10.74%. Developed world, the EFI, 7.64%. Emerging markets up 3.3%. Commodities year to date still up 6.25%. And then real estate is actually pretty strong this year, up about 16%. So in general, still holding on gains year to date. Have we seen the highs yet this year? I still think there's going to be volatility, any kind of resolution. I do think we see new highs, but it could be a while. I think we go back and forth a lot throughout the summer is going to be the expectation. Now, how our portfolio's did, I was pretty pleased when I saw the final results for the month. Growth with income, which is basically our balanced portfolio, for the month, down between 4 and 5%. Obviously, everybody's accounts are a little bit different, but with what I was looking at, we're that down 4.5 range. And one reason we're down so much there, so that's for the month. Year to date, we're up 6.85. So we're not too far behind the major markets. And the reality is we only have about 50% stock exposure in that portfolio. But in the growth with income fund, down 4.5%. Where we felt the most pain were in some of those bigger companies that I mentioned. Apple down 12% for the month. Nvidia, which we were up huge in, we were up I think 30% through April. That gave up about 25% last month. Microchip technology is down 19.5%. So from a technology side, the tech companies that are sourcing in China, that do business in China, they all felt, a fairly healthy amount of pain, 20+% pain. Apple, like I said, was only down 12%. But I think those are direct, I wouldn't say beneficiaries, but they felt the most pain from the Chinese issues. Exxon, energy was down.
Look at the point. Is there anybody out there that doesn't think Apple's an amazing company?
Well, you look at their balance sheets; they're good.
Yeah.
Long term, what do they do? It's going to continue. They all make money, so I'm not worried about those positions that we have. Nike was down 11.9%. Once again, I think it's more of a sourcing issue. But then again, Nike was up 25% prior to this, so we just gave up some of our earlier gains. Exxon, one of our newer positions, down 10% for the month. We had weakness in oil for the month. Obviously, Exxon felt some pain. In the growth of income, those were our big detractors. We had a lot, several things that were fairly flat. Gold was actually up 1.76%. The fact that we had all this volatility and gold really didn't move a whole lot, that means things aren't really that bad, and these are more headline issues.
These are headline news. It's
exactly.
Headline news.
So growth of income I was probably most disappointed in, not horrible. Dividend yield for the month down 3.5%, so less than half of what the indexes did. Once again, large, very strong balance sheet companies that pay above average dividends, that held up very well. Year to date, it's up 8.74, so basically beating the Dow, just slightly less than the S&P. Even in our dividend yield portfolio, we have 20 stocks in there, and 5 of our stocks did feel the impact of China. Caterpillar down 14 point, just over 14%. Intel, once again in that chip space, down 13%. British Telecom down 11%, LyondellBasell, which is a chemical company, down about 16%, and Boeing down 9%. So those were the detractors. We had some gainers in there. Pfizer was up a little bit over 3%. Waste Management up around 2%. Paychex up 2.5%. So we had enough stocks that were flat or up a little bit to overcome the weakness in those other holdings. But once again, not a bad month, down less than half of the market. Price potential, which typically is a more aggressive portfolio, this portfolio actually performed the best. And I think the main reason that is because we've stayed away from the really overpriced growth stocks, or we have limited exposure to the headline growth stocks, the big stocks that drive the S&P. For the month, the price potential is only down about 2.5%. So that did actually very well for the month. Year to date, it's up over about 9.1, 9.2% for year to date. So once again, that's starting to outperform. Our biggest detractors in there, we only had 3 detractors in there. Allison Transmissions down 11%. That was the biggest detractor. Google was down, or Alphabet was down 7%, and then Home Depot was down about 7% also. So, not a lot of pain in there with big downers. Medtronic was up 4.25%, so that was one of our bigger winners. Motorola is up about 3.5%. So once again, a lot of stuff around flat line, plus or minus a little bit. Those are the big movers in that portfolio. So I liked what's been going on in the price potential. I still think it's a good place to be. We have a lot of people in there, and I think it's positioned well where if things get stronger, we'll see the upside. But then again, we're seeing the downside's going to be limited through a month like last month. Our last portfolio, the small cap portfolio. Once again, we have 40 stocks in here. These are small company stocks. We see a lot of volatility. Actually, this portfolio held up pretty well too, down about 3.8%. So once again, less than half the market. So it felt half the pain in the market. Year to date, up 9.55. Once again, outperforming the Dow, a little less than the S&P. So that's done pretty well. For some big numbers here, from a loser standpoint, Shoe Carnival down 27% for the month. Emergent Biosolutions down 17%. Fabrinet down 29%. SecureWorks down 24%. That's not unusual.
That's some good volatility there.
Well, that's that portfolio.
What you're gonna get, yeah.
On the other side, NovaCare is up 20.5%. Tandem Diabetes up 11.6%. Hydrogenics up about 13.25%. So that's the nature of that small cap portfolio. You have some big winners, you have big losers, a lot of stuff in the middle. So that one performed pretty well too. So, so far, Our approach has worked when we see the volatility creep up. I think that's going to continue to be the theme. But like Cam talked about, you see any kind of resolution, especially on I think the Chinese trade stuff, you see resolution there, it looks like resolution. There's a lot of room to the upside with the market. The Mexico thing, I don't think that's really going to be a big issue. That may be headlines if nothing progresses there.
I think that was more of a shocker. People didn't see that one coming.
Doesn't surprise
that one really
her.
did come out of left field.
Yesterday, it was kind of a choppy market. A lot of green on our screens here with what we're holding. Today, the market was up a couple hundred points. 350 last time McCam looked. So, it looks like some of this stuff is drifting past us, but I think we're going to have a lot of plus or minuses. We've been 6 weeks of negative weekly numbers. Could have more of that. We're due for an up week. This could be it. Mm-hmm. But the reality is, keep our seatbelts on. One thing we've been focused on is every client's portfolios are different, and the big key is having the right amount of cash, the right amount of exposure outside of the stock market for your short-term intermediate needs. And that's always the emphasis of, hey, if you think things are coming up where, hey, I'm going to need a large amount of money, or I'm just not comfortable, just let us know, reach out to us so that we can make the adjustments in the portfolio, find the right time to lighten up if need be. But in general, the lightening up I did early in the year, I think is playing out for what's kind of coming right now.
That is a great point. I would just remind anybody, if you do have those big price expectations, if you do have those big expenditures coming up, let us know well in advance so that we can plan the right time to liquidate. There's nothing worse than being forced to sell in a down market. So if you know those expenditures coming up, whether you're buying a house or you've got college tuition payments or whatever the case may be, let us know as far in advance as possible. The more knowledge we have of your individual situation, the better the job we can do.
So that's where we're at.
That is where we're at.
Like I said, keep the seatbelts on for the next couple months.
Yeah.
Come mid-July, we'll start to really get a sense of how things are going from an individual company standpoint. But I like what we're holding. I think we're in a good spot. And that's about it for today.
That is it. Thanks, everybody. If you need anything, please feel free to reach out to any of your Ellsworth team members.
Thank you, and have a great month.